Welcome to a review of my positions on December 13th, 2016. This has been a terrible morning for me and my positions. I'm going to walk you through this NDX butterfly. This is the way I started. I sold it as an iron butterfly. It says iron condor here, but it's an iron butterfly because my short put and short call are at the same strike. This is just my brokerage platform, Thinkorswim by TD Ameritrade. That's the way they specify this position. And so I initiated this. I went back and looked in my account statement. I can go back and look at all my trades. So I opened this on December 2nd, which happened to be right near a low. And I positioned it slightly above the market. We were down here around 47.20, 47.15 or so. And so I made it a slightly bullish position, which really, the net effect was I was around just the middle of the hump on the daily curve, which is the purple line. The blue line is expiration at the end of June. So really just key off this purple line. And so it was, slightly bearish, 47.75. My initial thinking was if NDX breaks below its recent range, which was around 46.50 or so, I'd be okay a little bit on the downside. I can adjust down here. That's not a big deal. If it runs up really quickly, that would be problematic. But 4,900 I knew was a potential resistance level or place where I would hold it. And we did get a very quick rally, and so just a few days later, I moved some of the 47.75 calls up to 48.50, and that is the position it became. And you can see even as we made it up here to 4,800, I was already underwater. And then this morning, I held it all the way we were up here the last couple of days, and yesterday we had the market had retreated a little bit from the 4,900 level, so I wouldn't say feeling confident, but I was willing to hold it. And I think in yesterday's video I said I was waiting for tomorrow's FOMC announcement because I thought that would be the precipitation for a larger move, and I didn't think anything would happen today, which just shows you the ability to make a prediction. I have no idea what the market's going to do. I never do. And that's why I try to stay generally neutral. But this is a good example of what happens to option sellers who have neutral strategies like me. You could absolutely get run over on days like this. And so I was sitting around here yesterday feeling okay about the fact that we were at the upper end of the range and we might move back down into the middle of this structure, which would be great. But this morning that absolutely blew up in the first 5 minutes of trading. So I was forced to chase and move my, so I have a three lot of this butterfly. So initially I moved the first two of these 47.75 calls up in this transaction. And so then I moved up the last one. So I moved all my calls up to 48.50. So all my calls were here at 47.75. Now all three calls were at 48.50. And then as the NASDAQ continued to rally again in the later morning, I rolled them up with the call butterfly. So I moved 148.50 to the 49.75 and then bought a further call out here. So I'm just rolling this structure further and further to the right on this graph, which is the upside as the market rallies. And you can see this is my accurate P&L. So down about over $5,000, over $5,500. So this is not terribly pleasant. At this point, I do not have any high expectations to even get this trade back to profitability. It's possible. So really my plan now is just to mitigate this loss. If it continues to rally, I might roll these one more time, and after that all I'm really going to do is just close the calls, take off the puts, and just take a loss because it's just not working. And what really stinks about the current market environment is we get these huge massive rallies. Volatility tends to drop, although today volatility is increasing in anticipation of tomorrow's announcement. So now I'm losing in both ways. I'm losing as price rallies, and I'm losing on my short Vega. So these are really difficult days. I'll show you my February position on NDX, because remember that was more of a wider, longer time frame, don't have to do anything trade, and even that one got hit pretty hard today. So I was forced to sell more puts closer to the money, which I hate to do. And then I had to roll out. I had a short call here at 5,100. I have moved that up to 51.75, and so I took a pretty good sized loss on that today. It was at least a couple $1,000. And so what really sucks is because the volatility is relatively low and we're at these highs, I'm selling more puts to neutralize out my deltas, but I'm exposing myself to a very sharp down move, which I think is possible. Obviously, I'm in the vast minority of market participants who believes that the market can actually go down. Apparently, I don't know if it's the Trump thing or who knows. You always go and you find the news to match what the market is happening. So the news is generally not the cause of the market move. Generally, the market moves, and then you go look at headlines and you find some correlation, which is not causation. But that's a whole other topic, and that's my opinion. That we can save that for another day. So regardless of the reasons or what's happening, the market's going up. Everyone's piling in. There's a very large bullish contingent out there. Seems to be that's the major thesis everyone's going with. Just continue to buy stocks. I, as a more of a contrarian person who finds it difficult to follow crowds, I have a very hard time jumping on board. And hence, I'm getting run over on days like this. And that's part of my strategy. Maybe I need to change my strategy or add other strategies. Anyway, I'm rambling and getting off tangent a little bit. The main point is, as I am either forced to just close this position, take a loss, or manage it and try to stay with it, I'm selling more puts to offset the short deltas that I'm accumulating with my short calls. And these puts are getting closer and closer to the market, closer and closer to the money. I'm getting less and less credit because the volatility is low. It's really a terrible position for me as an option seller, as a premium seller. I don't like this whatsoever. This makes me very nervous. I don't like selling puts this close to the market. Although if it continues to run and run and run, this put I sold here, this vertical, that is not going to be enough to overcome the losses I'm taking on this short call. And eventually I'll just have to close this whole structure and take a loss. Which brings in just one more topic. If you're new to this style of trading, what can happen, and has happened to me many times and will happen in the future, is this can run and run and run, and you get all the way over here and you say, okay, I've had enough. I can't take the pain anymore. The damn market's just going up every single day. It's going to go up forever. I'm going to close my call, take a loss, sell a bunch of puts, just get long because it's just going to keep going up. And then guess what happens? Boom. So you're losing over here day after day. Just rally up, rally up, rally up. You're sliding down this side of your graph. You're losing money. You're losing money. You finally close this off. Just get rid of that call completely. Let's just have this nice, beautiful upside position where I can never take a loss as it continues to rally. My only loss is on the downside. And then guess what happens after that? Kerblamo. And you just start sliding down the left side of this graph, and then you say, ah, crap. I wish that hadn't happened. I probably need to sell another call as we move down here, or roll some stuff out and get myself neutralized. So let's get that call back on here, and then we start to rally, and you slide down there. So you get whipsawed back and forth, and that's really the most frustrating part of this style of trading. And you just have to either take your losses very quickly, which brings into a whole nother problem of management, or you have to have a lot of intestinal fortitude and be willing to be uncomfortable up here and believe that the probabilities will play out and mean reversion will happen and it'll move back into the center of your position. And I don't know what the statistics are. Let's say most time that happens. But it only takes one or two of these if you get stubborn and obstinate or reshort and decide that you're going to prove the market that it's wrong and it can't continue to rally, and you're just going to load up on more and more short calls and buy a bunch of puts. It only takes one or two times of you sliding off the edge of this graph that you can, especially if you over leverage yourself, you can run yourself out of business, or you can take such a large loss that it's practically impossible for you to get your account back. So that's a very long-winded explanation of what's going on with me today. That's just the NDX. As you can imagine, shockingly, Russell is only up about 0.25% today, while the NASDAQ NDX is up 1.5%. S&P is up about another 0.75%. So that my SPX position doesn't look very good either. I've had to make some adjustments there. But in general, this is a good example of how these positions go bad. When it's sitting in the middle of this position and the market just goes up a few days and down a few days and just has days where it's completely sideways and flat, I mean, those are beautiful times. When we're in a range and it's channeling this thing, you just sit here, you do nothing, you don't have to worry about it, you make money. It's just a gorgeous thing to behold. It feels wonderful. When you get into extended trends or, like I mentioned, big reversals, this type of trading is not very much fun whatsoever. And get days like this that are very frustrating and discouraging. But that's why it's important to keep your risk positions small and keep those manageable. So, I know $5,000 loss may seem really catastrophic to some people. That is within my risk tolerance zone. It's not. I'm not happy about it. Here we go back to this. I'm not happy about this number, but this is. I'm not going to go be. I'm not. I don't have to stand in a food line tomorrow. So this is within my risk tolerance. I can absorb this loss if it doesn't get any better, and I can do this trade again, and I can make $5,000 next month. That's the way this thing works. So I'm going to wrap it up there, and maybe at the end of the day I'll have another overview with the rest of my positions, but I think that's sufficient for today. You can get the vibe of what happens on a large rally breakout move, especially when it's in the first 5 or 15 minutes of the morning. There's really nothing you can do. You just have to chase the price. I continue to work my orders. Perhaps one time I'll show you how I work my orders. But you just have to keep chasing the order up until it's filled. And I never know what the actual price is until I hear the fill signal telling me that someone on the other side of my trade took the order and filled it. So you get big spikes in the morning. You just have to chase it. I have to adjust this. The market can continue to go and go. I can't wait for pullbacks. I can't just hope things come back into the middle of my range. I've tried that before. Guess what? It had a poor ending. That's a sad story. So you just have to take your lumps. You have to take your medicine. You got to neutralize yourself. You got to get flat. If you have some sort of really extreme bullish opinion, you could pull this into a bullish position and just continue for upside potential. That doesn't suit my personality. I have a very difficult time doing that. So I'm going to stick with the strategy that I know that has worked for me most of the time over the last few years, and continue to play out the percentages. That's the way this game works. I am trying to be the casino. So I'm not trying to guess where the roulette ball is going to land. I'm just trying to say, hey, I've got a 52% probability in my favor. You come pick wherever roulette position you want. You make the bet. I'll take the other side. So you guess what you want to do. I'll take the other side. Then my responsibility as the casino is don't let someone make such a large bet that it can put my casino out of business. And then in trading vernacular, that just means, I made this a 3 lot. If I make this a 30 lot, and this is a $50,000 loss, well, now I'm having a much different experience today. And so you keep the positions within your risk tolerance and be aware and expect that days like this will happen. And as a final note, this is a 1.5% move to the upside. I mean, this is it's a pretty bullish day, but this is not a huge, historic, drastic move. And we've seen a couple of times this year 5% moves in the overnight futures. So a 5% down move is very, very possible. A 10% down move is possible. That can happen. And volatility will absolutely skyrocket. And so let's, as a final note, let me go back and look at my February position. If this, and I can add a price slice in here. So add a slice. We'll change it to percent. Let's say if this is down 10% over here at 44.50, and then I can also adjust the volatility. Volatility is probably going to be up at least 20 points. We'll say 30 points. I mean, this maybe 20 points. But, well, actually, as you can see, because of that extra put that I bought, this volatility cranking up actually helps this position. If I eliminate the volatility, you just reset those parameters. If we have a 10% move down, according to this, I would lose about $14,000. So I can show you just how nasty a down day could be. It would blow. As I remember, I was saying, I don't like selling these puts so close to the market. We get a 1 day 10% crash situation. It could blow right through 2 of these verticals that I've sold on the way up on this rally. So that is possible. You have to consider the possibility and the reality that if you do this long enough and you're in the market day after day in these positions, at some point this is going to happen. You will be exposed to one of these events. And if you don't size your positions correctly, or you don't buy insurance ahead of time, because if this happens in overnight market when it's closed, or in an event like 9/11 where the exchange is closed for a week and you have absolutely no ability whatsoever to make a transaction, and it's just down here the next time the market opens, it's too late. If you didn't buy protection ahead of time, there's nothing you can do. You just have to deal with what happens when the market opens back up. And you really have to think about that, because many people have lost their entire account, or sometimes multiples of their entire account, selling naked puts, selling these downside protections with leverage. So it's a bit of a not so positive today. I've had some very not pleasant things to talk about today, unfortunately, but that is the reality. Not every day is sunshine and rainbows and lollipops. There are some prickly, not so much fun days where becomes a little discouraging and frustrating, and you start thinking about other ways you can spend your time and your efforts. But over the long run, this has been successful for me. I will continue to do this, continue to teach people how to do this, because I think there is a great deal of potential here to transform your life, to create more passive income, and have financial freedom, which is the goal of everything that I'm doing here, and what I hope to inspire and teach other people to do. So thank you very much for watching. I will see you again on another occasion.